This episode of Startup Project is brought to you by Bear.tax. Bear.tax compiles all your crypto transactions and makes it easy for you to file your taxes. Check out Bear.tax, that is BEAR.tax, Bear.tax. Hey Richard, welcome to the show. Super excited to have you here.
Thanks for having me. I'm excited to be here.
So when I was, looking at what you did before Fathom.Video, one of the things obviously you did is Uservoice, your last company, and this is sort of a good roundabout moment for me because in one of the products I was working on, we used Uservoice as the customer feedback system in Microsoft.
Oh, very cool. The startup world is smaller than I ever imagined. I think it's also what I've learned too. So that's I think you see this a lot. But yeah, we had a great footprint at Microsoft at Uservoice, a great customer. So
I thought a good place to start this conversation was just to talk about your experience with starting Uservoice and what are some of the key pivotal moments that shaped the user voice as a company experience, and where is it now?
Yeah, I mean, it's interesting because I started that company 12 years ago now, maybe 12, 13 years ago, and then started Fathom last year. And it's a study in they're very different, right? It's very different, I think, doing your first startup. And obviously the startup world is very different than it was 13 to 14 years ago. And I think I'm pretty unique amongst my peers and other startup people I know that got started kind of mid 2000s, and then I stuck with that company for about 12 years. I think most of my friends did 3 or 4 startups in that time period. But Uservoice itself was kind of 3 or 4 different companies within it, right? And I think that's sometimes not atypical for startups where you start with a certain business model, a certain target buyer, and it shifts. And frankly, we did every model under the sun, right? And if you're not familiar, Uservoice is a platform for product feedback. Originally started almost kind of almost like a Reddit for customer feedback. And I think our original claim to fame was we kind of invented, like, when you see like the little feedback tabs on the side of websites, like we were the first people to do that. Lesson learned, if you're going to build something, think about which things actually could be like IP. You can't make IP out of putting a button on the side of a web page. That's what we did. And so, yeah, we started off, it was very organic, very scrappy, really that company's rough beginnings, right? It's like hard to find co-founders, hard to find developers, hard to find investors. Yeah, I was actually slept on a couch. I was couch surfing for like 8 months of the first year we were working on that company. We found one investor believed in us to put money in, and then we kind of went from there. But it went from a completely free product to a freemium product to a more top-down sales model all along the way, and scaled that thing from 0 to just shy of 10 million rev. And a team of like 40, 50 folks. So it was a good run. But it's so funny. It's night and day compared to Fathom, where like I started with like the top engineers. We raised money in the first week of having the company up and running. I didn't couch surf at all, Airbnb surf, but didn't couch surf at all. But yeah, it taught me a lot.
So what is the state of Uservoice now? It's its own company, and you're now, you moved on to Fathom, but Uservoice still exists, right?
Yep, Uservoice still exists. Our former VP of engineering basically ascended to being the CEO, and I meet with him on a regular basis, and it's great because I think after about 12 years, I like to run through walls, and probably one of my strengths is probably perseverance. But even I was like, okay, we need fresh ideas in here, and we need some fresh blood. And it just so happened kind of the idea for Fathom kind of came up around the same time from some of the work I was doing at Uservoice. And so it felt like a natural time to like, great, I can go take this thing and take it 0 to 1, and Uservoice is in good hands.
So let's talk about Fathom.Video, right? So how were you actively thinking about what should I do next, and were evaluating different ideas, or how did you go about this idea of making Zoom calls more productive?
Yeah, it's interesting. I think when I was at Uservoice every year, I asked myself 2 questions at the end of the year. Am I uniquely qualified to run this company? And is this company giving me differentiated learning? Is this something, am I learning something unique? And so for a lot of times I was generally saying yes to both those things. So I wasn't really thinking about other ideas. In fact, I kind of firewalled my brain off to not think about other startup ideas. I was like, let's stay focused on the mission with Uservoice. But we'd actually started the process of diversifying Uservoice. And I had actually taken a small team inside of Uservoice, and we were building out, or not really building out as much as prototyping and testing new products that Uservoice could build and sell to his existing audience of like product managers. That's kind of our target buyer. And in the process of doing that, I did just a ton of like customer research kind of early last year. I think I did like 300 Zoom calls in the first like 5-6 weeks of 2020. And it was, it was just back to back to back every day. And, that experience is what kind of led to Fathom, because I would be on these calls. You get like 15-20 minutes. I love user interviews. I love kind of like, it's like a lightning round Sherlock Holmes thing, right? Where you're trying to like, with the right questions, unlock some interesting pain point or some interesting insight that maybe wasn't surface level obvious. And I love the conversation. What I hated was I'm trying to talk to someone, I'm trying to pull this information out of them, and I'm like rapidly trying to type out like, oh crap, here's what they're saying, right? And then I had like a limited window once the call ended where I had to clean up those notes and make them make sense, because they literally were like random words on a Google Doc. And that combined with, once I take those notes and share them with my team, or even I just look at them 2 weeks later, I'm like, I don't remember this call. Which call was this again? Doing tons of these, and I share with my team. I'd have amazing moments on these calls. I'd have like people get really excited about something I mentioned to them, or really confused. And I'd like share my bullet point notes with my team, and they'd be like, okay, like we don't get the big deal, right? It was like, and that was when it hit me. It's like, oh my gosh, we're losing so much fidelity here between, the nuance, the tone, the face, everything of having these conversations. And then all that shows up is a couple bullet points in a Google Doc. And then I thought about, as I mentioned, I ran a bunch of different parts of Uservoice at different times. And I remember I ran our sales team. And I remember when I ran our sales team, I had the opposite problem. My sales team were people on the calls, and I would look in our CRM and see a bunch of notes, and I would like note quality vary wildly, but no matter how good the notes were, I was always left being like, what did these people actually say when they push back on price, or when they objected, or they brought this competitor? And so that was the aha moment for Fathom. It's like, this is ridiculous that we are like trying to like play a game of telephone with bullet points and trying to be, court reporters while having conversations. Let's build an app that just real time records, transcribes, and gives you almost like a soundboard to highlight those moments. And then your call actually becomes that living artifact of the conversation. No one wants to rewatch the entire call. So like, let's give you the way to send snippets of it, send them to Slack, send your CRM, et cetera, et cetera. And so it worked out very well. Like it just kind of like fell into my lap in some ways. It was like, this is something, a pain point I was acutely feeling. And I was like, we prototyped a few ideas, and then I was like, okay, there's something here. I'm gonna go start a company and build around solving this problem.
So when you found this idea and were thinking about creating a new company, how did you estimate the opportunity here? Because if you look at just the productivity space today, even in remote, like there's so many products, right? I mean, there's Zoom, there's Teams, there's Slack, and they're like different ecosystems among productivity. And if you're a remote knowledge worker, right now your cognitive ability is stretched thin across multiple products. So how did you think that whether there are there are obviously other transcribing products as well out there in the market, right? So how did you think about is this a company that could actually be a company on its own, or is it just a product or a feature? Like, how did you make that call?
Yeah, I mean, I think that part was actually pretty easy, because as soon as it dawned on us, like this could be bigger than just product research, like sales, customer success, maybe even recruiting. There's other analogs. So I just looked at comps, right? So I was very familiar with Chorus and Gong, which are kind of the top two heavyweights in kind of the sales coaching recording space. And in both of those, I think Chorus just got bought by Gong, was raising at multi-billion-dollar valuations. And so my company had trialed that product, and I before we even got into this, first thing I did was I went and interviewed like 100 Gong users and Chorus users and asked them, what do you like, what do you not like? Because I was like, I think this already exists. And I went and dug in and found, okay, no, there's some like serious gaps or like windows of opportunity, both product wise. And then I just look at it and say, like, these guys are still relatively new. They're now at multi-billion-dollar valuations, and they're only focused on like sales, and they're only focused now on like mid-market enterprise sales. They're a pretty expensive product. So kind of like, that's kind of honestly like the, later on we got into Y Combinator, and we had to do all these like TAM defense, like analysis. And, there's 11 million sales and CS people in the US alone. And if you could charge them $25 a month, like, but honestly, in the beginning, it was just simple as, okay, well, who would we be competing with, and how big are they, and how well saturated are they, right? Like they're still pretty early in their journey, but they're already multi-billion-dollar valuation. And I think we can, take them on, and we can do a much bigger market than them. So back of the envelope math just said like this could be a really huge opportunity.
I think, I mean, just not quantitatively, but qualitatively, TAM expanded from, say, sales to almost everyone, right? Because of the pandemic. Because so much of our meetings are now fully on Zoom, and Zoom sort of also became a household name because of that, right? So it's sort of qualitative gut sense is there that, okay, TAM is now extremely large.
Yeah. The other thing we looked at is, look at how did those companies get started, and how has the world shifted since those companies got started? And, when those companies got started, they had to build integrations with like 10 different video conferencing providers because there was no runaway leader. And our research said, oh, no, now there's a runaway leader, right? And that's Zoom. And so that obviously helps too. It allows you to like reduce the scope, right? Okay, we can just focus on one video conferencing provider and hit 75% of the market. So there are another other of factors. So it's like one, looking at the total addressable market, but also then two, looking at what has changed in the technological landscape that makes now a good time to do this. And, we looked at that, like the rise of Zoom. We also looked at the commodification of transcription. Transcription is still a thing it's good, but not great. And one of the things we lean on versus there's a lot of tools that are just like, we'll transcribe the thing for you. I don't think that's enough, because if you read a transcript, it's not the same as like hearing the clip. There's something about it that just doesn't convey the knowledge. So we always knew that we wanted to share clips as opposed to sharing transcripts, but we knew transcription was something people wanted. It's an important output of that. And we looked at it and said, these guys 5 years ago, when they started going on course, had to build their own transcription. And now there's a ton of transcription providers, and we can do a bake off and the price compete them and stuff like that. And so that also is what led to us thinking there's an opportunity here to not only build a big business, but also build a big freemium business, because the costs are getting lower every day.
I think just for the audience sake, can you describe what Gong does?
Yeah, so Gong is probably the first big company that was built around, recording all your sales calls. And rather than, I don't think they lean much on like helping you take notes. They have some facilities for like sharing portions of the call, but they really lean on more of, we're recording the calls so that we can tell the manager how the team is doing. Oh, they're talking too much, they're talking too fast, they say too much, they start late, they end late, that sort of stuff. It's more coaching. Yeah. And so that's a subset of what we do. But like we found like, there's a big opportunity here just to actually help them run better calls, right? As an example, one of the things Gong does, like, tells you your talk time. Like, oh, you talk too much on this call, but it doesn't tell you until after the call is over. I was like, well, I want to know while I was on the call that I'm running my mouth too much. So that's what they do. And they're a fantastic company. It's, they've got a great brand. They've got a loyal following. And so in some ways, it's one of those things where a lot of people thought we were crazy to go in the space, because they'd look at Gong. Again, it's not an old company. It's not like you're competing with a 20-year-old dinosaur. It's a relatively modern company with good branding, good marketing. But that's what I think made it such an opportunity, because no one wanted to go up against it. Right. Yeah. And people actively went around it. And
also, I think that going back to the TAM concept of what pandemic did, like it changed who's the customer, right? From companies to managers to sales folks to pretty much anyone who's in knowledge economy now has as Zoom or Zoom-like tool, and they want all these services to be more productive.
And also just the delivery mechanism to be able to go bottom up. I'm gonna give, rather than you sign a 5-figure to 6-figure contract, wait a month for implementation, 2 minutes in, cool, you've got access to product, you can get value from it. And I think any industry where you look at and you see a dominant player that is a top-down model, and if there's a way to do a bottom-up model, PLG motion, it's, I think it's, there's probably some opportunity there. Right. And that's what we're kind of seeing.
In terms of like the actual product, right now you can, you have action items, bookmarks, insights, pain points, and feedback, and regular feedback, and obviously transcription of a Zoom call. When I look at the Fathom.Video as a product, as an outsider, I can just think of, different interactions, because you're almost at the center of where productivity or productivity is starting, or all the workflows for productivity are starting, right? Then that means if I create action items, now I already have these action item tools from Microsoft's products to Google products to Asana and all the other competitors out there, or Jira. And similarly for other for feedback, you have Uservoice and Uservoice like companies, right? How are you thinking about in just product direction? And I felt that from here on you can just start exploring and expanding the product portfolio to integrate into different sort of things. And how are you in general thinking about this? Because I think to truly make a Zoom call productive, now you have to also think about the end-to-end workflow, from where are the users going from here to actually make themselves productive. So I would like to get a sense of how are you thinking about prioritizing and coming up with ideas in this direction?
Yeah, I think one of our core product tenets from the beginning has been integration, right? Like, I think in this day and age, everyone now has enough SaaS tools, right? No one wants to pick up something that doesn't work with everything else they already have. And you're right that Zoom meetings are kind of like this, it's almost like this, one of those gift boxes you get in the mail, a bunch of random stuff. It's like, you're going to have some stuff, you're going to have some technical questions. You need to go to technical resource. You might have some product feedback. You need to go to the product team. You've got action items that you need to follow up on. You've got, an objection that your sales manager might want to see. And so there's all this work afterwards to get all these things to the right places. And I think, that's another place where we looked at what existing solutions were doing. And they were just kind of like, here's your recording in a box, and you've got to go still do all the work to get it that last mile. And we saw that early on too, where we built everything but these integrations. If you're like, this is pretty good. And then we built up the CRM integration that would automatically log your call, auto generate the call summary, put your task in your CRM, and people are like, this is amazing, right? And it's I think a classic jobs to be done type concept, right? Where you got to think about this thing more longitudinally of what is done for my user, and can I get them 9/10 the way there? It's almost it's like playing American football. It's that's not a touchdown. It's a turnover and downs, right? You got to get to the end zone. You got to get to the goal state. And so, we've had folks dedicated, CRM integrations, product management integrations, obviously Slack, right? It's communication. That stuff I think is killer. I mean, you look at companies more and more, you see that this is a key product tenet of a lot of successful companies. I mean, the one that comes to mind now is ClickUp, right? Who is kind of crushing it out there. Is they from day one just built a raft of integrations, and not just integrations, but really good integrations too. And that was everything we knew. We was these need to be 5-star integrations. This isn't, used to be you build this crappy integration that doesn't really work, but then you can kind of check the box and say, we've got this integration to close the deal. And that works maybe in a top-down sales model. But in a PLG motion, you get exposed very quickly if your integration is actually any good, right? Because people just churn out because they're not stuck in an annual contract. So it's been a huge boon. And I think also it's great from a partnership angle. You can do co-marketing around it. And so, we probably spend a third of our time on core tech right now, corporate product. We spent about a third of our time more recently on onboarding, and we spent a third of our time on integrations.
So how has the growth been? Because the idea is very much familiar towards sort of helping the pandemic effects and post-pandemic effects. And you started the company in between the pandemic, and we've gone through the ups and downs of the pandemic cycle. Have you seen any change in terms of adoption or growth during these up and low cycles of pandemic? And how do you see the post-pandemic growth being, even for let's say last couple of months?
I think most of our we've only been out, we launched really August 1 of this year. So we had a very long internal beta process, private beta period. And we launched with the new Zoom apps platform that came out July 21st, but really probably about 1st of August. So, we're here in December. So it's been about 5 months here. So it's not enough time for us to see any particular trends. I do think that, a lot of our use cases is external calls, right? Like someone meeting with a customer. And even pre-pandemic, that was already shifting, or in most cases, a lot of the cases was already 90% on some sort of video conferencing solution. I think the pandemic's pulling some of those field sales things to permanently remote telesales. I think we haven't really seen any effects of a pullback on internal usage, because honestly, we can't tell because we're just growing so fast that I don't think we would notice if there's some slight pullback in that. But mostly that's why we also focus on, we think customer calls are where it's, you can't get a customer back on the line. So if you miss something, it's really gone. And that's where the stakes are the highest. And that's what we've really focused on. Internal calls, we have a bunch of these for internal calls, but I also think there's other things that are under my internal meetings, we focus a lot on asynchronous communication, right? I send looms in lieu of meetings often. So there's a use case there, but I don't think it's as strong as the customer call use case.
Shifting a little bit towards fundraising, and you've raised funds for Uservoice, and then you have done fundraising for Fathom.Video, and obviously the whole ecosystem is now night and day from last 15 years, right?
Yeah.
What was the experience that you have had with fundraising back then, and when you see even right now, how did the experience change for you?
I mean, I think it's funny, we went through last winter's YC batch, and fun trivia fact about me, I actually was an employee for a YC company in the first batch of YC back in 2006. And so I've seen both ends of the bookend, right? It's a great climate to be fun, to be a founder. I was joking to some of the folks on our YC batch, you'd show up to a VC meeting 10 years ago and people would be like, who the hell are you? Right. And they'd be on their phone within 10 minutes, right? If you didn't hook them. And now I think there's much more competition for deals. And so just frankly, many more investors are founder friendly. Many more investors are ex-founders themselves, right? Like 10 years ago, they were the ones getting the crappy VC experience. We've done something kind of unique, and I can't go into too many details because we haven't really announced any of our funding, but, with Uservoice, we, had a seed round, and it was, one firm did the entire allocation. And this time we've almost raised money every 4 months. Every time we've hit a milestone, we've raised more money. And, we've raised, a couple $1 billion. I won't say how much, but our average check size is like 50, 60K. And so we've been very intentional about getting lots of small checks. And that's kind of my theory of this is partially because of the market. There's a lot of people want to write small checks, but part of it also is I've just, as this being my second time around, I less need one really loud voice, one early stage VC that could really show me around. And what I really want more now is a diversity of smaller voices, right? I send an investor update to 70 people and I get back, a whole different set of networks, perspectives, connections, et cetera, that I think is really, really helpful. I think it's also one of these things too, where it's really hard as a founder to assess which investors will be the most helpful. And also helpfulness isn't really as correlated with check size as I think you would think it would be. Often the person writing a 10K check even out of their own money, and it's one of 5 investments they'll do this year, is way more invested in your success than that early stage VC that's writing out of a $300 million fund, and they drop 10K on the floor for lunch, right? So we've actually optimized for angels, and also I love new funds. Someone starting a new fund, they really care because they're trying to make a name for themselves, right? So there's good alignment versus you can tell when you get into a meeting with someone where they've already made their brand and they're kind of I don't care whether your company makes it or not, I'm already on the Midas list type of thing, right? And so I think that process is a little bit different, right? It's also de-risked because rather than me have to take 20 meetings and hope one of them works or 2 of them work, I'm kind of just slowly getting checks as we go. Again, that has its own risk too. And if you're a first time founder and you may not have the network to do it, it may just be better to just get one big check and go back to work. But in our case, I think it's been really beneficial.
Yeah, I like the fact that now founders are trying to raise money from a lot more people than just having 1 or 2 funds or investors on their cap table. Yeah. And when I talk to for some of the founders, especially first-time founders, I don't think they don't really get the value of why it's important to have more investors on the cap table, not like thousands, but you want to have or de-risk how many investors are on your cap table and whom you can reach out for different sorts of things. I almost see that comes with experience. A lot of the second-time founders often have this idea of positive sum game better than first-time founders because they realize that this is a long-term effort and you have to say sustainable. And if let's say you have 1 investor and if you as a company is not exciting for them in their portfolio, then for the rest of the time you have to find another investor who you can make excited about your vision and company.
Yeah, it's on this unspoken kind of thing where it's when a VC invests in you, they're excited when they first invest in you. Fast forward a year, 2 years later, if you're not in the top, they're going to make their money on the top 10% of their portfolio, maybe their top 5%. If you're not in that bucket, they're not going to, they're not going to not help you, but they're certainly not going to be as helpful as they would to that. And so I think that's something that I think first-time founders aren't aware of. And also I think brand, right? I think it's easy to get seduced by the big brand VCs that, you hear a lot about, but at the end of the day, it's about who you're working with, the partner you're working with. And, you could have I've heard plenty of stories from like named VCs that still weren't the most helpful at the best case, or were kind of shady at the worst case, right? So I think in general, it's just nice to de-risk that, because again, last thing I want to do is spend a bunch of time doing a shotgun wedding with someone who has 10, 15% of my company. It's much easier to do it when I'm talking about giving up half percentages here, there, and everywhere, right?
Also, the infrastructure, behind fundraising is also so much improved right now, because 10 years back to now, it's so much easier to take smaller checks without the hassle of founders going through a lot of paperwork.
Between like Safe Notes and things like Pulley and Carta and Karki and all sorts of stuff, like, yeah, it used to be also like everyone would be worried about the headache of, oh gosh, you can't have 20 investors in cap table. That'll be a nightmare. Who cares? It's the rows on a spreadsheet, right? Yeah. And so, yeah, I mean, we're actually we're doing some crazy stuff where we're actually like even making, like, we're doing the same sort of strategy for advisors too, where we used to have, you'd have 2 or 3 big name advisors. Now we're gonna have a pool of a couple hundred advisors, and a lot of them are going to be a lot of our early users who are giving us great feedback. Yeah. And now think about the effect of that, of like, okay, now I'm arming hundreds of people out in the world have a best interest in our success and are telling their friends. Social media has made it a word of mouth world once again, and I think there's a lot of opportunities to hack that people aren't today.
Yeah, in one of the previous episodes, I was talking to Eric from Alto IRA, and they raised a large round from traditional VC firms. But what they also did was do an equity crowdfunding round for a very small amount, like $1 million or $2 million. It's smaller compared to the larger round that they're raising, but it's important for them. And when I asked Eric, why are you doing this? Then it's almost like, and I had this notion about equity crowdfunding as well, because the difference between Kickstarter and equity crowdfunding is now you have real interest for the customers to actually promote your product. Right? If there is a competitor who is entering into the market with same goals, same products, maybe even better, sometimes you're protected by your network, who's incentivized to promote your product. And you have like this army of people talking about it without doing any marketing campaign. In fact, it's what I call negative CAC, negative customer acquisition cost, for a big marketing campaign.
Yep.
So it's great that a lot of founders.
It's such a crowded space now that like every vertical is crowded, right? And so you have to find some way to get an edge, and even when you have a great user, you got to do something that surprises and wows people. And this is still something you can do to do that. Yeah. We're thinking about the same thing. I think the crowdfunding thing is really exciting. I also think it's great in general. It's always frustrated me when, the accreditation, rules block so many everyday folks from getting involved. I kind of get why they're there, but I think, once you have products that are in the wild and you're using it yourself and it's great, you want to be able to participate in the upside of that.
Yeah. What are your thoughts on valuations? Because one of the things that happened in the last couple of years is every round valuations are extremely crazy. What are your thoughts on that?
I think I'm very grateful every day for all the crypto projects out there, because they make all the valuations in SaaS seem very, very reasonable. Even if they don't seem reasonable by historical SaaS perspectives. It is certainly a much better market than it was, 10 years ago, or 10, 15 years ago. But it's also like, the public stock market is crazy too, right? Like everything's kind of reaching this kind of tipping point where we get to inflection points faster, things ramp up quicker, so therefore valuations ramp up quicker. Also though, at the end of the day, like I think it's important not to get wrapped up in the valuation game. At the end of the day, I actually push back a lot on people who like over optimize for ownership stake, right? Like, yeah, you don't want to give away the farm, right, in your first round, but at the end of the day, like it's all about growing the pie more than anything. And especially if you go this route of having a bunch of small investors, no one's gonna, board seats you should worry about. Like you don't want to like lose board control and necessarily that, but in terms of from an equity perspective, you don't have to be so tight. Get the right people, get the money you need, get back to work. This is like one of those, as mentioned before this, like we just did this like product hunt launch and like we got product of the day and it was like the startup mini game, right? It was kind of like slightly orthogonal to the main quest line. And I feel like fundraising is that too, right? And so, it's great the valuations are high, but at the end of the day, it's like find the valuation where no one says no because of the valuation and cool, just get your money and get back to work.
Yeah, I mean, one of the negative things about, because there's not of overvaluing, and what I see is second-time founders are a little bit hesitant about that, but first-time founders are, going ahead and valuing it at the higher side of what they could value. But I see a little bit of it as a negative because most of the startup exits are acquisitions, right? When it comes down to product acquisitions, and whoever is acquiring is looking to get higher return on investment. So the overvaluations, if you're overvaluating your company very early on, very high, I feel like you're almost taking your company out of the M&A game.
Yeah, you might like, I think at every valuation rung, right? Every time you add a zero, right, or add an extra digit to the valuation, you lose basically exits, right? Yeah. More doors are just not going to be open. So that's a really good point. I think the other thing is, it's easy to ramp this. Like we've ramped valuation last year. Every 4 months, we literally we've increased valuation, and that allows us to find, there's certain really strategic folks you might want to get in the beginning, right? And then, like we got a bunch of folks that were that really understood the Zoom ecosystem really early, and that was super valuable. And would they have come in at the current valuation? I'm not sure, right? Because I think some of the more well-connected, folks are somewhat more valuation sensitive. So, but again, I think at the end of the day, there's really no wrong way to play it necessarily. They're all trade-offs, right? Like a little bit of equity equals options. But I think you're making a point, which is I'm not sure everyone knows the trade-offs they're making.
Yeah.
Right. By choosing different valuations.
I think because fundraising has become a milestone instead of, you have to just think about it as one of the things you need to do to, actually build a company. Right. I think there's also a lot of perceiving fundraising as a milestone itself, like you're almost considering itself as the goal.
Yeah, especially if you're a first timer, right? You're a first timer. Like I remember, I was just like obsessed with it. I was like, oh my gosh, what if we like raised money? Like like it's this thing. It's like this huge validation point, and like you should totally it is a validation point, and you should be proud when you reach that milestone. But I think as you get to do it, you're just like, this was a side quest, but Money in the Bank. It really had no impact on, not no impact, but it had limited impact on actually. I still have to execute the business, right? And so I think it's also one of these funny things where like no one's ever excited generally by the time the money's in the bank, because it's one of those things where you think you're gonna be excited, but by the time you get there, you've gone through so many steps of the process that you're just worried something's gonna go wrong, right? You've already priced in your mind that we're gonna have a couple $1 million in the bank come tomorrow, and when it hits there, you're like, yep, cool, back to work, right? So it's also one of those frustrating things. It's never like all of a sudden you have like one call closed, the next day you wake up and you're surprised by there's couple $1 million in the bank. So don't over optimize for it.
Yeah. So talking about investors, one of the companies that you raised funds was Zoom itself, right? Zoom invested in Fathom. How did you think about making that decision? Like, I mean, obviously it's very well aligned because you're on Zoom, but did you have concerns about, okay, if in future we want to expand it out of Zoom, like did you have to have this conversation internally or with Zoom team, or was it just like a regular any other investor?
No, I think before even the investment, and the investment in some ways was the cherry on top of already a very strong relationship between us and Zoom, right? And like we were already in like their Zoom Apps program, as a startup, which was kind of rare because it was mainly like bigger companies that were in this. We had a bunch of connections with like the product lead, and so it was more of a consecrating the marriage, if you will, and be like, okay, like as it honestly, I don't know that it really changed the relationship much at all, or if anything, but it was more of like a symbol that we are very tightly aligned here. Again, it's also not, because we didn't raise, no one is a significant portion of our cap table. It's not like there's any leverage here that they could exert on our business. And I don't think they want to, right? I think more important is we understood their motivations for these investments. Sometimes people are making investments to get information. Sometimes they're getting it to like steer people in a certain direction. And it was very clear from Zoom that they recognize that they have a pole position in the market, and the best way to increase that pole position is to foster a healthy ecosystem around it. And this is their way of doing that. And so we felt like, okay, well, that's, we would have our alignment was already there. We've done all the same things if you didn't invest in us, but it's nice to be able to tell the world like, hey, we got married, right? Like they invested in us. It's a strong relationship.
So let's talk about how Fathom is actually making money, right? What is the current business model like?
So we don't actually monetize yet. We're planning to do that sometime next year, but I actually think that trying to monetize at the same time you're trying to figure out growth is like means you do both of those things somewhat poorly. And so we've kind of taken the approach of, we're going to just start with figuring out. I did this with Uservoice too. For Uservoice was completely free for the first year and a half. And the trick is you have to just be ready to write off like those users will forever be free, right? And we're fine with that. And it's a good trade-off for someone taking a risk on an early product and dealing with the inevitable issues that come up and variable bugs and stuff like that. So and I think so far that's borne out well, especially in a market where there is a decent amount of money floating around to invest in things that people believe in. And, we could tell a good story about the TAM, and we can now tell a pretty good story around growth, especially in the last couple of months. So I think that's, and I think if we had to at the same time, I think the amount of effort we spent on on onboarding in the last year, just to get it really dialed in. And I think if we had to also split time between trying to think about how to charge money for it at the same time, I think we'd be in a worse place than we are right
now. So one of the things that's happening right now is this conflict between marketplaces, app stores, and the apps, right? We've seen this battle between Epic and Apple, and that resulted in Google reducing their take rate in the marketplaces. How would you seeing Zoom app as a marketplace, considering you're one of the top category apps in the marketplace right now? And what are the dynamics are going to be like? Is there any idea from Zoom, from your communication with them or interaction with them? Or how do you in general see this Zoom app marketplace grow?
Yeah, late stage marketplaces are very different than like early stage marketplaces, right? And, if you look back over the last 15, 20 years, every new kind of marketplace opportunity or new kind of integration opportunity usually has spawned a handful of big businesses, right? You think about like Zynga back on the Facebook platform. You think about even some of the Google AdWords stuff early on, right? So I think that we looked at this simply as, gosh, very rarely do you get an opportunity. Distribution at this point is more important almost than product, right? It's like there's so many companies out there. And we didn't think about this with Uservoice. This is one of the things I would say I've learned differently. Like with Uservoice, I was like, we built a product, we found a team to help me work on the product, and then we figured out how to get it to the market. And this way we actually went like, what's the market? How are we going to get to the market? Great, let's find the team. Great, let's now build the product together. And, thinking that starting with that kind of distribution first mindset. And so we had some plans, but it was actually one of the biggest concerns we had early days of Fathom. And then when we learned about this new app store experience, this new marketplace that Zoom is putting together, like that is such a talk about a greenfield opportunity to be able to get in there early. And there's challenges with early platforms too, right? Zynga had some of Facebook's, like you're kind of riding, they're figuring things out, you're figuring things out, you're both flying the plane and building at the same time. But if you can do that, and if you can kind of ride that bull and not get thrown, it's a huge opportunity. And sure, maybe a couple of years from now, we'll be, I'll be arguing with my friends at Zoom about like the take rate or something like that, but we're a long way off from that. And so right now it's just been all upside and, fantastic people to work with.
But do you see Zoom marketplaces is going to be a significant sizable marketplace? Or because for me it's hard to imagine. I can see this a category of transcription and sort of workflow integration, sort of in the area where you're building products. But do you see that there's a larger marketplace opportunity for Zoom here? Because it's hard for me to visualize that this is going to be as big as and Google App Store or any other app store.
Big from this perspective of the startup, or big from the perspective of Zoom?
From the perspective of Zoom.
I think the perspective of Zoom is we have the dominant tech, we have the best tech for having a video conference, but there's like, as we talked about earlier, that call is the beginning of a lot of different workflows, right? And if there's an air gap between us and those workflows, if there's no integrations into all those workflows, there's no things in there, there's nothing that stops, something else coming out a month from now with better tech and everyone moving over, right? There's, if you swap down my Zoom link tomorrow with something that was better, I may just move over to it. And so I think they recognize, one might be, it's kind of like Salesforce, right? Like the Salesforce marketplace isn't as big as the Apple marketplace necessarily, but it's provided a ton of value for Salesforce in that it's almost given that product way more longevity than it probably would have on its own, because everyone doesn't like working in Salesforce, but they do it because of the ecosystem, right? And so, it's unclear whether the Zoom marketplace at marketplace is probably at worst Salesforce and at best, halfway to Android or halfway to Apple. It's probably not Apple. Maybe it can't be. Either one of those are really good outcomes for Zoom. And even the worst case outcome is a phenomenal outcome from the startup perspective, right? Like that's still 1,000x more distribution than I would have gotten on my own. So from our perspective, it's a very easy sell. Yeah,
I think first-time founders are always thinking about the product, and the second-time founders are always thinking about distribution.
Right. Yeah.
But I think you made a really good point about Salesforce marketplace. I think for certain products, I think you still do need to have a marketplace, even though you're not going to be as big as Apple or Google app stores, because it just fosters integration and sort of ancillary products that you want to exist in the world, but it's not a large opportunity for you as a $50+ billion company, and you want that integrations to be done by someone else, and instead of you doing it, you can have a marketplace, and that's a good way for them to actually monetize their own product as well, because it's only driving more consumers, more product integration, and more community and distribution for them as well.
100%. Yeah. At a minimum, you want to, in the beginning, you're doing what we're doing, which is we build all the integrations into someone else, right? Yeah. We do all the legwork, and eventually hopefully you get big enough, and then you want everyone to keep building into you to keep maintaining your lead. What you don't want to do is not have that, and then you've got no integrations with the new upcoming tools, and now you've got a service area that someone else could exploit, right? Yeah.
I mean, for other Zoom competitors who are entering or trying to build this, they have to foster an entire ecosystem, which will also, the most important thing is time, and it will take a couple of years for them to do anything close to what already Zoom is doing.
Correct.
So one of the things, other things I want to ask is, what is the future for Fathom? How do you think about future? Let's say 5 years down the line, where do you see future? What is the vision down the line for Fathom?
I mean, I think I think it's one of those things where it's like once it seems normal that when I open my CRM and I'm looking when I'm asking my team how are our customers doing, it seems natural that I'm just reading a bunch of bullet points inside of our CRM. But you take a step back, it's insane to me, right? It's like we have hours of conversation with our customer, and all that shows up in my CRM is a couple of bullet points. Don't really mean anything other than the person that was on that call. And so I think there's a real opportunity for us to, on one dimension, become kind of a de facto tool that anyone who's a power Zoom user, right, doing a couple calls a week, which is a lot of us these days, right, that doesn't want the stress of trying to remember everything that happened, especially when you have back-to-backs. So I think there's a huge market there for us, right? And we want to go become like a ubiquitous tool, which is why we've built the product to be somewhat horizontal. It's why we've done the pricing model, can make it completely free. We'll continue to make it free. But then I think there's a T-shaped business here where you've kind of like Zoom, actually, right? Like Zoom is used by people all around the world. They've got a lot of free users. In fact, they get a lot of flack for how many free users they have. But then they have this very deep kind of like business user, and even down now an enterprise user, where they make significant amount of money. And I think that's kind of our model too, where there's a kind of a T-shaped business that we can build here, and similar to Zoom.
As we're ending the conversation, one final thing I wanted to ask you about is, you obviously been an entrepreneur for now, I think 10+ years, and after Uservoice, now you started Fathom. How did you think about your career back then, and how it changed right now?
It's a good question. I mean, I just like building things. I think I think with Uservoice, there were times where I was like, I've got to make this thing work. Right? There's all times like we had the zig and zag. We were probably, like I said, a couple different companies within it. I think more recently, sometimes you build up your company very quickly. You get to like 20 people, 30 people, whatever, and now you're not on the front lines, and you're now a manager of people, which can be awesome because those people, when done right, it's like putting on this like Iron Man suit, and like you think about going right, all of a sudden, look, all the stuff has been built. But I really love the 0 to 1 phase. I really love the beginning of this, and I'm excited to grow up this company too. But I just like building products that we put in people's hands and they send me back emails and say, this thing is awesome. For whatever reason, that's what fills up my soul cup every day. And so, long-term, I have aspirations to get more into things I think are at a macro level more impactful, like climate change and stuff like that. But in the meantime, like I'm pretty good at building web widgets. So I'm just going to keep building little web widgets until that it's no longer a good business anymore.
Thanks for taking time, Richard. This has been a fun conversation and looking forward to using Fathom on my Zoom calls.
Yeah. And if anyone else listening to this wants to check it out, Fathom.Video/pod. We have about 80,000 people, maybe not 85,000 people on the wait list. If you go to that link, you will skip directly over the wait list to get priority access. And I'm on LinkedIn. So if you have any feedback for me or thoughts or questions about anything we talked about today or Fathom, you name it, I'm not much of a Twitter person, but if you message me on LinkedIn, I'd be happy to chat.
Thanks, Richard.
Cool. Thanks for having me.